Құрметті ханымдар мен мырзалар, орындарыңызға отыруларыңызды сұраймыз. Рахмет. Дамы и господа, просим вас занять свои места в зале. Спасибо. Ladies and gentlemen, please take your seats in the hall. Thank you. Құрметті ханымдар мен мырзалар, орындарыңызға отыруларыңызды сұраймыз. Рахмет. Дамы и господа, просим вас занять свои места в зале. Спасибо. Ladies and gentlemen, please take your seats in the hall. Thank you. Құрметті ханымдар мен мырзалар, орындарыңызға отыруларыңызды сұраймыз. Рахмет.
Gentlemen, we're glad to see you again today. We continue the World Forum of Central Depositories, the second executive panel session on the future of CSDs, embracing AI, blockchain, and digital assets is open. This panel will explore how these innovations are transforming traditional post-trade services, ranging from security, safekeeping, and settlement to corporate actions and processing, while enabling new capabilities like tokenized asset custody, enhanced regulatory reporting, facilitated cross-border interoperability. And we invite the moderator of the meeting chairman, ex-chairperson of the risk committee, Clearstream, Mr. Mark Jem, and all of the panelists to the stage. You are welcome.
Thank you. Good morning, everyone. And I'd like, first of all, to take the opportunity to thank CSD for the wonderful evening we had yesterday. Wasn't that great? And thank you, Balta and team, for treating us so well. We had a great time. Now, firstly, I should apologize on behalf of Brian Pascoe, who's the Chief Executive Officer of ICMA, who was due to give us a plenary speech right now. Brian has had a little bit of a conflict, and we're going to hear from him later during the day, and we'll reinsert that in the agenda at a certain moment. So, without further ado, we should start, and I'll allow my panel, very distinguished, who know way more about digital assets, about blockchain, crypto, and all the rest of it than I do, to introduce themselves. But I will introduce Zhalenov, who is the Chief Digital Officer of the National Bank of Kazakhstan. And Binur is going to talk us through a little bit where Kazakhstan stands in these primary dimensions, and spend 5 minutes or so taking us through that. And then I will ask each of our panelists to do the same. So Binur, perhaps I could ask you to come up here and
1, 2, 1, 2. Good morning, everyone. Welcome to Kazakhstan, and congratulations to Kazakhstan CSD for co-organizing, co-hosting such a wonderful event. Hopefully, we're going to get a lot of interesting discussions. My name is Binur Zhalenov. I'm Chief Digital Officer of the Central Bank, National Bank of Kazakhstan here. So let me walk you through the recent developments in digital asset industry in Kazakhstan. Recently, in his national address, President Tokayev set the absolute national goal to make Kazakhstan a fully fledged digital country within the next 3 years. And we do believe that blockchain as technology and tokenization as a concept will drive this digital transformation as well. So we, together with other government agencies, we are trying to build a comprehensive ecosystem for digital asset circulation in our country. So we have a lot of benchmarks all over the world, including Hong Kong, for example, UAE, European Union with MiCA, Genius Act recently in the US. So we tried to get the most relevant and the best options from each kind of regulations and develop the proper regulation. So we are introducing the new classification for digital assets. So we're going to have two broad categories, backed and unbacked. Unbacked, that's all related to utility tokens, bitcoins, foreign stable coins, etc., etc. And backed tokens, we're going to have three categories. The first is 10-year national currency backed stable coins, digital financial assets referencing the real world assets, including financial ones, and natively tokenized financial assets. So these amendments are now under review in the Parliament, and we hope that by the end of this year we're going to have the new regulation. So the key features of this new regulation that we are withdrawing ban of crypto circulation in general jurisdiction here in Kazakhstan. We're introducing new licensing regime for OTC crypto exchanges. We're introducing new licensing regimes for operators of tokenization platforms and many, many other things. As you might imagine, that's a huge work because we have to involve the FATF principles, etc., etc. So we hope that this new liberal regulation will drive the further development of the market. The key issue that we have at the moment that only 5% of the entire circulation of digital assets in our jurisdiction in regulated area at the moment, and 95% is unfortunately in the gray area. So we have to move it here, and we also want to enable the tokenization. We also launched the regulatory sandbox because regulation might take a lot of time, so we have to pilot at the moment. So starting from this June, we are developing new crypto-to-fiat rails, crypto payment rails essentially. The first product is crypto card, when you can link your traditional bank card with regulated crypto wallet and spend money directly from your crypto wallet. Now we are limiting this to stable coins only, but in the future that will evolve to unbacked assets as well. We also, actually yesterday, we launched the first 10-year pegged stablecoin with on Solana, with Interbix crypto exchange and MasterCard. There are two more stable coins are coming from the Binance and from the local Fintech startup. There are also a couple of projects for tokenization of real estate. There are a couple of projects for the debt tokenization and other real-world assets tokenization. CSD also is a participant of our regulatory sandbox with market infrastructure projects such as crypto custody, etc., etc. So, and we also have more than 15 projects under review for regulatory sandbox, and we hope that by the moment when we will have the fully fledged regulation, we will already have a lot of pilot projects that actually make our ecosystem holistic. We also, recently, the President Tokayev announced that we are going to launch the State Crypto Reserve. This State Crypto Reserve will be organized on the basis of our subsidiary, which is National Investment Corporation. And KCSD will play a key infrastructural role here because KCSD will be a custody, sovereign custody for our State Crypto Reserve. So we looked through several benchmarks for such a state crypto reserve. Probably the loudest one is strategic Bitcoin reserve of the US and digital asset stockpile of the US. There are some other examples like Bhutan strategic reserve. Pakistan recently launched their state strategic reserve. So we also derived the best from all of the examples, and now we are going to create that. By the end of this year, we hope that the first operations will start. The key, the first liquidity will come from confiscated digital assets, and then we will work through our investment strategy. Also, there is one of the probably important initiatives is a Crypto City initiative. As some of you might know, we're going to build a new city, which is called Alatau City. It's around 50 kilometers from here in Almaty. They're going to be the entirely new regulation, potentially with the common law. And in that city, we're going to make like a super sandbox, sort of, right? So, so that we can build regulation for DAO, DeFi, other Web3 things. We already started several pilot projects regarding that, including crypto payments, different sorts of tokenization, And we do believe that some DeFi protocols potentially also might be regulated specifically in that area. That's going to be a very interesting example, I do believe. So to finalize, we do believe that Kazakhstan has all the potential to become a key crypto destination of Eurasia, become a key regional tokenization hub in Eurasia, and we hope that our efforts as a regulator will help us to make this reality. So that's long story short. Thank you, and I'm ready for a discussion. Thank you.
Thank you very much, Binur. It's absolutely impressive to see the progress here in Kazakhstan. So thank you for that. Now I'd like to turn first of all to you, Alexandre, to ask you a few words about, from the perspective of CSDs and infrastructure, to firstly introduce yourself, but also to say a few words about the initiatives that you've been involved in and what perspectives you'd like to share with the audience.
Sure, so my name is Alexandre Kech. I'm the CEO of the Global LEI Foundation. You would wonder why an identity infrastructure like GLEIF is interested in digital asset. I will share that a bit more later, but my experience in digital assets started in 2017 when I was at SWIFT still at the time, and understood that that would potentially revolutionize how value is transferred between participants. And after trying to evolve the SWIFT mindset, I decided to leave SWIFT to jump into the rabbit hole and created my own crypto company with 3 other co-founders. So experience in crypto custody and prime brokerage. And then after that experience, I moved to Switzerland, where I was working with the 6th Digital Exchange, so one of the first exchange and CSD to implement solutions on blockchain, private blockchain in this case, looking at evolving it to public blockchain. I live in Zug, one of the city that was on the slide of the previous speaker, which effectively I can pay my taxes in Bitcoin if I want, or pay my insurance in Ethereum.
I thought you didn't have taxes in Zug.
Well, we do have 15% of taxes, but you can still pay those limited taxes in cryptocurrency. So it is interesting to live in those cities where early on there was an understanding that this type of technology and assets would change the life of people. When I started in 2018, 2017, let's be honest with ourselves, there was a lot of denial in the community of banking and CSDs around the potential of this technology. I'm glad to see that now it's part of the agenda of everybody, because I personally believe that, and it has been proven over the last years, that it will revolutionize how CSDs operate markets in every country, and also for those who are international CSDs across countries. My view, and that was the thesis I developed at SDX, is that assets will move closer and closer to the owners of the assets through decentralization. So it means that that will have an impact on the safekeeping or custody role of CSDs in the future. Does it mean that CSDs will disappear? No, obviously, because exchange market infrastructures, FMIs, their role is not only to safekeep assets, obviously, is to organize markets, is to enable country regulation to be applied to financial markets. And that's an essential role for FMIs that will continue to exist even in a decentralized world, even in a world of digital assets. I believe that the role of CSDs in the future will be maybe less and less custody, but more and more critically organization of the markets, permissioning of who has access to what assets in what way. So KYB or for KYC of the participant of the market will become the essential part of the work that CSDs will be doing in the future. And it is a missing part in today's digital asset world. When you look at digital assets, they are generally, if we want to benefit from the extended access to those assets that blockchains enable, you need to be able to ensure that these assets end up in the right hands. You need to be able to ensure that wallets that receive those assets and exchange those assets have been properly KYC'd, KYB'd, that they're compliant, that if it end up into an individual wallet, that person, for example, is an accredited investor, if that instrument is only accessible to accredited investor. And all that process requires identity, and now you know why I'm here, identity and verifiable identity. I will finish by my first statement by another statement by the CEO of BlackRock, Mr. Fint, who said, and he's convinced everything will be tokenized, funds, equities, bonds, but we need first to solve a critical issue, which is verification of identity, verified identity. And that's what GLEIF, the Global LEI Foundation, now is doing. It has established a protocol called the Verifiable Legal Entity Identifier, or VLEI, which enables exactly that, not only on digital asset platform, but on any platform, for companies to prove who they are on any digital platform, and for people, systems, AI agents, acting on behalf of that company to prove that they have received the delegation of authority to act on behalf of the organization. This to avoid fraud, this to avoid impersonation, but to enable compliance to rules and regulations.
Alexandre, thank you so much for that very erudite overview. You've a lot of food for thought there. And let me then turn to Stanley. So from a CSD point of view, Stanley, perhaps you could explain a little bit about how the CMU in Hong Kong is transforming into OmniClear, and then perhaps how you see that your CSD being sort of developing in the dimensions that Alexandre so eloquently laid out.
Okay, thank you very much. My name is Stanley Chan, and is the CEO of the CMU OmniClear. It's quite a new company, possibly not many people here heard of this name before, because CMU is a system running for more than 30 years by the Hong Kong Monetary Authority. It used to be a part of the operation of the HKMA. But then last year, the HKMA decided they should outsource the operation and development of the CMU system to a company so that we can operate on a more commercial way to deal with the rapid changes of the market developments. The CMU system is still owned by the HKMA. It's still public utilities, but it's just run by a private company, which is wholly owned by the HKMA, and possibly later on may draw in strategic shareholders to run this platform. This company is set up last year and took up the CMU operation and development at the beginning of this year. And we have developed a quite aggressive strategic plan for the coming 3 to 10 years, and hopefully not confine ourselves in the conventional CSD business, but be evolving into something that can cope with the future development of the market. And one of the areas about the tokenized asset. And we started tokenized asset development back to 2 years ago, 2023. We issued the first tokenized debt securities by the Hong Kong government in Hong Kong dollars. That is a pilot test, and we learned a lot from that issue. Not only about the technical design, how it can, facilitate the tokenize of the debt securities, and also how it can, interface with payment systems and also the conventional, CSD system. The most important thing is we have to test out the regulatory and legal issues, whether, under the Hong Kong's common law regime, whether it is feasible and workable, under, that sort of legal environment. And luckily that, go through, a very rigorous, research and studies, and by different groups of lawyers, eventually we launched the bonds, and to be certified, as an issue that can satisfy both the local and international regulatory, requirements. We ride on a platform developed by the Goldman Sachs. because we consider it's very important to adopt a sort of engagement approach. We need to engage market players with the will to develop the digital assets, and also would like to invest in this platform, and also to engage those market participants to work together to work it out. I think that is quite a good exercise, and we learned a lot of issues in our first issue. And then we launched the second issue in 2025, and that developed into a multi-currency issue. It's not only in Hong Kong dollars, the local currencies, that was settled in the sort of central bank money, but we also launched the issues in US dollars, euro, and the renminbi, just to try to test out whether it could be a sort of multi-currencies, whether it could be supported by the international community. So with the support of EuroClear and Clearstream, we successfully link up this digital platform with the conventional system in Hong Kong, and also with the ICSD system, so that EuroClear and Clearstream participants can actually sell and buy and hold through this digital asset platform. I think that is a good exercise through the collaboration with the market participants, not only the DCM team in arranging the issue, but also with the market infrastructure players, and also the investors, to make things successful. And I think it's quite interesting in the second issue, we changed to another platform that is supported by HSBC or Ryan. I think we consider it's a sort of learning process, but then thinking forward whether that would be ideal arrangement, or CMU should develop its own digital asset platform. We are still considering it. But then, going forward, possibly we have to test out more things. Not only confined to, the scope we have. The coming issues that we are thinking of is whether it could be linked up with the CBDCs or stable coins, so that, it can make the platform more flexible to cope with the market development. I think, that is what we're trying to do so far.
Thanks, Stanley. Yeah. That's what's fascinating about that is how you're kind of innovating, but also reusing, repurposing existing rails. And I think that's a theme I'd like to come back to in our conversation. I'd like to introduce you all to Gunsel Topbas of Manifest Consulting, but formerly, I think, of Citibank, somebody who's been very close to the CSD community for many years. What sort of use cases are you seeing, Gunsel, that are, that you think are likely to remain and prove sustainable and successful?
Excellent. Thank you, Mark, and would like to thank also WFC2025 for this excellent setting. It's great to hear from the local voices how much work has been done, and also some early arrivals into the landscape. My name is Gunsel Topbas. I'm the co-founder and Fintech practice lead at Manifest Executive Consultancy, based out of Dubai. And I am actually working and advising financial institutions, market infrastructure, as well as fintechs. I will come to the real-life examples of tokenization, because digital assets is really to my heart. And it's not because I'm a digital asset bureau, as like the crypto bureaus, or not also an ideologist of blockchain. I'm actually, by bachelor's degree, a computer engineer, then turned into finance degrees. So I can tell at least at the start that it doesn't need to be a coder or to be a technician to really be able to visualize what blockchain and DLT technologies might bring in. Going back to Manifest and the advisory roles, I have been, over the last 1 year, practically working with a number of institutions, startups, and experimental as well as real-life examples of tokenization of real-world assets along with the securities. On the real-world assets part, I'm also an adjunct faculty. I'm lecturing at American University of Sharjah on alternative investments, which is very much to the heart of our topic. And I'm also an independent member at the Fintech and Innovation Committee of Arab Federation of Capital Markets. So, as Mark mentioned, prior to this, I worked for Citibank and managed the custody business across the region, most recently out of the IFC Dubai, across Middle East Africa, for 14 countries. And prior to that, I worked for the Turkish market infrastructure. My colleagues is also here in this meeting, for Takas Bank, which was the CSD of the time. It was before my time with Citi. So this industry and colleagues are really to my heart, and I can really relate to the challenges, difficulties, and opportunities that are coming along with this discussion. And I said 1 year, and right 1 year ago, I was attending the AMIDA and Euro-Asian CSDs convention that they had hosted together in Istanbul. And there, over the 2 days, there was probably only one panel that touched base briefly on the topics that we are discussing here today, which was also discussed half day yesterday. So that there is already a big uptick in terms of the take-on of the topic. And what I see happening, especially from the involvement that I have, right now I'm advising a fintech startup that is having real-life POC cases with a number of large banks in money market funds. That's, I think, in general, around the globe, one of the first initiatives of tokenization. Then comes the Eurobonds. Then comes gold. That also has different use cases relating to gold. Then comes real estate, obviously, as Binur also mentioned. I think that is one of the biggest ambitions of many jurisdictions to get into that. And it goes beyond. So from the alternative investments perspective, and from what I also would like to emphasize here, now we are the capital markets world. We are actually relating to the securities industry. But out of this industry, there is a huge amount of real-world assets that are standing illiquid. And these assets have the huge potential of being tokenized and come over to our platforms and exponentially increase the asset under management, asset under custody of this industry. I think the opportunity and the challenge and the risk for our industry is, if we don't necessarily pay attention as the CSDs and the conventional custodians into this space, then we risk to be marginalized in 5 to 10 years. Because when the real world assets, this huge asset base, comes over the chain and becomes part of the capital markets, as they will be used as collateral, as they will access more liquidity, they will be the means for also liquidity for the issuers, as well as new investment opportunities for the world. Then the securities that we are dealing with, if it is off-chain, right, it would remain as a minor portion of the overall asset base. And our industry either have to move anyway, so it will be a must to move over the chain, or it will be marginalized. That's why I see only one way forward to really look into this, and whether it is with a mandate or it is experimental, to really start working on this space to be able to get future-proof and future-ready.
That's fascinating. I mean, yesterday at a panel we heard the opposite concern, that issuing native digital assets risks their marginalization because of the lack of, if you like, liquidity and interoperability with legacy systems. And that's a theme I think we should just explore a little bit. But before we do that, questions on digitization, tokenized assets, digital assets, please post them into Slido and we'll consider those. But on that question of the coexistence of traditional and legacy settlement systems with DLT, but also with tokenized forms and natively digital assets, how do you think that's likely to evolve, Binur? You have this great overview from a national perspective. What are your expectations there?
So, you know, like, my mind is changing over the time. I started thinking about this when we started our first tokenization project, which was CBDC. We were first in the region who launched, actually, central bank digital currency. Starting from 2023, we have fully operational CBDC. At the moment, it's actually retail use case. It's mostly for public finances for now. So the programmability enables higher transparency, et cetera, et cetera. And when we started to design how the CBDC will work with the like broader national financial payment infrastructure, we thought how to like manage all of this, because in the end of the day, the CBDC potentially can cannibalize some of the functions and operations, for example, of RTGS. Then we thought, okay, we can get something from DLT and tokenization and just make our current rails more effective without changing the underlying nature of money. And that something like, how do you call that? Synthetic CBDC things, right? And all of that different things. And in the end of the day, inevitably, I think that would be a matter of network effects. Because the current rails, they have huge network effects, and current leaders in payments, CSDs, whatever, any market infrastructure, will already have these endpoints connecting all of the like consumers. If we're talking about SWIFT, it's 11,000, I believe, endpoints. If we're talking about Visa or MasterCard, they have more than a million, right, network of networks and all that stuff. We cannot just say DLT or blockchain is a better technology, so you guys, we're going to switch there. Because in the end of the day, that's not about technology, right? That's about like legal interoperability, I would say, semantic interoperability, all of that, connections between entities globally. So my prediction is that we will, it will be bizarre within like 3 to 5 years. That would be, unfortunately, a fragmented market. Even within the one jurisdiction, we're going to have, unfortunately, several closed-loop tokenized platforms. That's my prediction. Look, even in the US, we have JPM Coin City or whatever. They're all trying to build a closed-loop infrastructure based on tokenized deposits in that case, right? And everyone will try to do it because winners take it all in the end of the day. But in the end of the day, we as a regulators will intervene. And CSD actually will be a key market infrastructure for interoperability, I do believe. So we will start cautious. At the moment, we already in our regulation, CSD will play a vital role because it will be a single registry for all issued digital financial assets here and real world assets. And starting from that, we're going to increase the role of CSD here, adding then KYC, KYB, then adding other options. In the end of the day, we need all of that digital financial assets to be interoperable, at least within our jurisdiction with each other. So that will be a coexistence, but how we will design it, I don't know. That's nobody knows, I would say.
I think that's a great problem statement. And if we could then take that same problem that you've described with crypto and turn it to digital securities and tokenized securities, what would your expectations be, Alexandre? How important is backward compatibility, or could you envisage a world where closed-loop systems might prevail?
Hopefully not, because, well, I see 3 interoperability challenges that we have with this transformation that we currently experiencing. There is the clearly traditional infrastructure, new infrastructure interoperability. There, I don't think that's a major challenge in the sense that it has been proven that it's possible to have an existing infrastructure interconnecting with a blockchain infrastructure and vice versa. SIX and SDX is a good example of that. The two CSDs were interconnected so that participant of a traditional CSD could have access to digital asset, and that's what you did with Clearstream and Euroclear as well. So that I'm not too worried. Of course, it's creating friction in terms of the benefits of blockchain in those situations, but I don't think we can avoid it. It's just life. You need to step-by-step evolution and coexistence. The second interoperability issue is clearly between blockchains and between silos and closed loops. But that's also a natural human reaction to novelty or new technology. We've seen that with internet and cloud some years ago. We all started with our own intranets, and then we were comfortable using internet as the public internet as a way for our customers to access our services. The same for cloud. We all started with private clouds, and now more and more banks and infrastructure are moving to public clouds because they're more comfortable with the security and access and economies of scales they can get with public clouds. I think it will be the same. We're all going to start with our private closed loop blockchain implementation, and then progressively, as we get familiar and comfortable with that technology, it will be more and more public blockchain type of implementation, where maybe 2 or 3 CSDs will start using the same Solana blockchain or Ethereum blockchain or whatever blockchain will prevail. There are already solutions that enables cross-chain interoperability, so like Layer 0 Chainlink, for example, protocols that enables assets to move from chain to chains in the public chain world. We're working actually with Chainlink to enable identity and KYC and compliance to be cross-chain with the VLEI, the Verified Legal Entity Identifier. So that's the direction of travel. I think we need to go through that painful phase of coexistence and interoperability issues, because we can't just switch off an existing system and immediately move to the new system. But ultimately, the goal should be, in my view, everybody's using public chains like we are using internet today, public internet today, and it creates economies of scale, it creates access to digital assets, and the control of that public infrastructure can be done through permissioning, KYB, KYC, leveraging portable identity systems like the VLEI and other decentralized identity and verifiable credential protocols.
Thank you, that's super clear. And Stanley, I'd like to come to you also with the same question, because as Alexandre has noted, you've kind of been a proponent, or at least HKMA CMU has been a proponent of this backward compatibility, and as have Clearstream and Euroclear, as you would rather expect. But that rather raises the question of, one of our audience has put here, of who drives tokenization? Is it simply experimentation and the sense that you need to keep up with the technology? Is it the customers saying this is what we want in order to reduce frictional costs, etc., going forward? Or is it simply a regulatory government policy which is driving that? And I think that's an interesting dimension to consider.
There are a bunch of questions here. I totally agree. We are facing a sort of evolving situation, from conventional into a digital platform. To start with, as a CSD, we start with the conventional financial products, say like debt securities or possibly covers equities or whatsoever. It's just a start of the journey, I can say. We start with something we are familiar, but based on what we experience is that, say like for tokenized debt securities, we found that the value added for the post-trade process is not that substantial, because the current conventional system is already very efficient. T+0 settlement with liquidity saving devices and all these sort of things. But then why we still have to go to a DLT platform? Then we merge with the issuing process into the platform in our exercise. so that we can see end to end what we can add value to the market. And we see that the efficiency of the issuance process has improved substantially with the DLT platform through better communications and shorten the processing time. That is step by step evolving to see how DLT platform can supplement to our conventional platform. But you can see the chunk of the liquidity or the chunk of the securities are still in the conventional platform. And with just a few issues in the DLT platform, they cannot survive in the long run. How we can improve the liquidity of the securities in the DLT platform and how to engage more market participants into that platform is a question that we are facing. But we see quite encouraging development is more and more issuers would like to use the DLT platform to issue their bonds because they see the issuance benefits they gain from that platform. And that would draw more market participants into this exercise. But as I said, this is only a start of a journey. Digital asset could be anything. It's not just financial assets, just like we just talked about the real world assets. We have to pay weight for that sort of development. We need to have some experience and we have to gain our knowledge in how to supporting this development. Say like down the road, how to do the standardization, how to interoperable between different DLT platforms or the conventional platforms. We all need to put in efforts in doing this in order to develop the future platform for the real world assets. Yeah, that is what we're trying to do. Of course, whether it is a sort of government push or whatsoever, definitely, we need to have the support from the regulators and from the government, to support us in a way they provide a sort of regulatory and compliance-friendly environment for us to develop, this platform.
Yeah, and that's very consistent with our experience as well, that the drive is coming from the issuers, and in particular to reduce the elapsed time it takes to price and bring an issue to market, and that turns out to be the friction point that is for us driving tokenization. So it's interesting that our experience is meld on that point. Gunsel, I'd like to get your perspective on the same thing. What's driving tokenization?
I think there are four main drivers that I can share here as far as I can spot. The first one is actually related with the cryptocurrencies, right? So Bitcoin as a cryptocurrency was launched in 2008 along with the concept of blockchain. So for those of you that may not necessarily know, Bitcoin is both a cryptocurrency at the same time a blockchain where only one product can exist on that blockchain, which is Bitcoin. So what happened then, following this sort of revolutionary step, it evolved into Ethereum, and then it then blasted into the ICOs of the so initial coin offerings, reached up to thousands, which often most of them are valueless and some of them are meaningless even, right? So that was a hype. So that hype actually created road accidents in a world where regulation didn't exist, right? So then in a world where regulation doesn't exist, institutions also couldn't step into any part of this, and they were actually even resisting, defending against, and crypto as a word had a very bad connotation. I avoided using the word crypto at my Citibank days because people would be walking back and away if I said crypto, whereas cryptography is meaning the security of something, right? in a computer algorithm. So there are controversies. One is the cryptocurrencies, which actually, with the road accidents of likes of FTX and others, resulted in the regulations to step in for the protection of the investors. That started from mostly the retail investor protection. But the regulators felt the need to step in, which was a good thing, on the other hand, right, controversially. So when the regulators started looking in and started regulating this area of Wild West, then the institutions started also looking at it. I think from the institutional investors' point of view, that was the second pillar following this, because they couldn't resist the portfolio diversification element of the crypto, like so Bitcoin, Ethereum, and their relationship with the other assets, clearly, because that's also what I teach at the university. They are uncorrelated to a great extent. So that's the academic part, but the market part, obviously the price of it, right? The value of it. And therefore the institutions started developing products on Bitcoin, ETFs and such, where the regulators also, as I mentioned, they were already looking at it and they started working with the institutional and for the institutional demand. Then the third pillar is the issuer part, right? And that is not necessarily our world, but the real world assets world more often, because the asset owners who are sitting on illiquid assets, what would they want? They would like to create liquidity for their assets. They would like to get it into the financial system. They would like to use it as collateral. And in turn, they would like to access loans and operating capital and such, right? So that is the third pillar, which I see most of the demand is coming right now, or the driver is coming, the issuers. Either it is the real estate developers, or it's the sukuk holders, or it's the sovereign wealth funds sitting on certain illiquid assets. So that is the part where the driver comes from. And the last piece started, say, less than a year now. I told that originally banks resisted. They actually walked away. They didn't want to even look at it. But when I wouldn't give names, but when a number of global new age players stepped in with a new form of currency called stablecoin, and when they started sending money cross-border at a fractional cost of the existing networks and at a fractional time needed, almost instantaneous, guess what? The global banks, whose bread and butter is the cross-border payments, they had to react to this. They cannot stay away, otherwise their food will be taken away. And to an extent, it's already been taken away. They have to be a player in this game. More reactive than visionary, but they had to step in, and they stepped in. Now, the stable coins, therefore the money on-chain, obviously has a positive effect on the asset on-chain for the settlement part of it, because our brains are designed money versus asset exchange, right? Not asset versus asset as it was 1,000 years ago. So I think where we stand right now with the stable coins becoming the norm, and Binur just mentioned that they've launched Tenge stable coin, and there is more. That is the same out there with the USD. There is in the UAE, and across the board, around the globe, there are many use cases. So in my view, that would make it more effective as well as speed up the application of tokenized assets and the use of tokenized assets, because it will be more conventional in our minds for the settlements, right? So I think these are the four drivers, and where we stand right now, we are just at the edge of this happening in a more exponential pace.
let's spend a couple of minutes on stablecoins. I mean, Tether is one of the largest holders of US treasuries in the world. So, Binur, how do you think what role should CSDs be playing vis-a-vis stablecoins? On the one hand, they are inherently the custodians of the securities that back stablecoins. On the other hand, stablecoins as a settlement currency potentially threaten those CSDs who are unable to cope, etc. I mean, what advice would you give to the audience here on that point?
I think it varies from jurisdiction to jurisdiction. I can tell about here in Kazakhstan because obviously the big economies like EU or the US, they obviously their politics and their policy, they set the rules of game for the entire world, and we as a smaller open economy, we have to adapt. We see a huge risk to our monetary sovereignty and financial sovereignty because of rapid expansion of the stablecoins, because it's effectively hidden dollarization with no capital control instruments, with nothing essentially, right? So we cannot do that. So, and you cannot simply ban that. That's not how it works in DeFi world. So our strategy should be and is to build a self-sustainable ecosystem here, so that the consumer will choose tenge-backed stable coins over the USDT, for example. How we can achieve that? We can achieve that through building a more user-friendly experience with tenge-backed stable coins. And that's a chicken and egg problem, unfortunately, because you cannot build a seamless experience without a proper infrastructure, market makers, and all that stuff. But you cannot invite these market makers and others without the proper supply and demand structure in the market. So as a regulator here, we have to be proactive and intervene to solve this chicken and egg dilemma. To build infrastructure, potentially we will even will play a role of liquidity provider here through our state crypto reserve. That's a potential option that we are discussing, that we have enough liquidity here so that market makers can then play their game. And what particular strategy CSD should choose in our country, it's very simple, because CSD again will be a vital financial market infrastructure and tokenization. And in stable coins specifically, it also will play a role as a custody for the underlying asset, for reserves of stable coins. And I think in our market it will be easy. CSD will backed by regulators, so we are interested in CSD transformation and playing a key role from the very beginning of the design. But in other jurisdictions, again, I think it's very jurisdiction specific. But as for now, it's important to build a capacity. I think that's a key pillar that should be a focus of every CSD leader, is building capacity through pilots in regulatory sandboxes. Just learn and then learn, and then everything will, I think, be fine.
Great advice there. Thank you. So, Alexandre, we have a question for you as we pivot to the downsides of some of these developments. With any innovation, you get new risks. And what the question specifically, and it's for you, is about how CSDs implement digital services as FMIs, and thinking presumably of their regulators as well, and the regulations under which they and the markets operate. How do you limit and address contagion risk?
Concentration risks.
Contagion risk.
Contagion risks.
But let's say risk rather broadly.
Risk in general. Well, any technology and any new technology or any new processes leads to new risks, or a switch of risk from one type to another. So I don't think there is necessarily it's not because you open the system that you necessarily lead to contingent risks. I think open system can lead to being able to actually manage that type of risk through the multiplication of access to assets, the multiplication of assets, access to geographical access actually to systems. So to me, it's actually a risk mitigator to have an open system where you're not only relying on one infrastructure, but you can go via another infrastructure to get your assets, to get access to your assets, for example, or to settle your assets, or to manage your assets. So I don't have like a full response to that question, but I don't see openness and open networks like public blockchains, for example, can lead to as leading to necessarily a contagious risk, contingent risk, sorry.
It's an interesting point about sovereignty, of course, Binur. And on that point, Stanley, coming to you, one of the debates we've had in Europe around digitization is a level playing field with existing regulation. So the idea that in a sandbox you obviously have more liberal attitudes, but as those projects enter the real world, then there was a perception in part of the market that the regulators were perhaps engaged in a little bit of a race to the bottom in this competition. And I just wonder what your perspective on that was.
Yeah, I think the financial inclusion is very important in a way that we have to provide a level playing field for the market. But then if you're talking about CSDs, is a financial market infrastructure, I think they have a role to play in supporting the market development. Just like we discussed about the DLT platforms or tokenized assets, it can be done by any institutions, right? But I think the issue is boiled down to the trust of the CSD. CSDs got a long history, and they are good at administrating the project. It's not necessary the CSD has to be the owner of the platform or whatsoever, but we need to have somebody doing the administrative role to set the standards, to set the rules, so that the market players can use the platform. I think that is what I think CSD can play a role in supporting this development. But of course, when it goes on the development path, whether we just confine the platform to the existing players, or we'll have to open up the platforms to new players in say like new products, new services. I think that we have to look after down the road.
Gunsel, what role do you see the regulators as playing? I mean, the various projects, markets that you're exposed to. I mean, you're uniquely positioned to sort of see what the differences are between different regulatory approaches and so forth. And within that, are we exacerbating resilience risks?
Thanks, Mark. I think regulators have a major role here, driving the market as well as whilst protecting the investors and the market integrity. So Binur gave a very good example and a balanced view on how National Bank of Kazakhstan is actually approaching, on one end, the sandboxes and the experimental. On the other hand, they are aware of what is happening and supporting, and also they have the oversight and to regulate further. So where I live and I work, Dubai and the UAE is also a good example. There the government is very much also behind both the digital assets, tokenization, crypto, AI, all kinds of future-proof technologies and their implementation. And I think around the world, UAE is the only example where a dedicated regulator exists for the digital assets, virtual asset regulatory authority. And of course, the major offshore financial centers, they also have their own regulator with their own regulations on the same topic, the IFC and ADGM FRSA. So that is one example. I was recently in touch with the Turkish regulators because why I say Turkey, this is one of the largest crypto adoption markets, $150 billion of crypto trading, 60% were stable coins, and for the reason that you mentioned, access to dollars. So that is the new risk, but at the same time, you cannot close your eyes and walk away as a regulator, right? You have to be very mindful both regulating for the protection, but at the same time to pave the way for the development. That's a very fine balance. That is not an easy one. What I can name as, from the regulator's perspective, I think it started from Asia. Hong Kong, Singapore were the leaders in the space. UAE, Switzerland, Luxembourg have been also in the space for long. And when you look at also the companies who are the leading players, they're also coming from these jurisdictions. But there was one missing link in the chain, crucial, that was US. Without US being the largest capital market in the world, turning their face to this new era, it wouldn't be happening. Now with the US also looking, with their regulations coming in now, the recent Genius Act and the very much huge support from the administration, we can debate the reasons, dollar value, we can debate the reasons, but the important thing is now the US regulating this landscape. All the other countries are more motivated to go this route rather than just being afraid of crypto. And I can count at least digital, to our point that we discussed before, a handful of countries that I am sure will be looking into this from protection from the dangers of crypto into the potential of the digital assets, tokenization, and the DLT. I can give you one major example. It is Saudi Arabia. I was in Riyadh last week, Money 2020. I heard about SAMA, the central bank, with their sandbox. I heard about the Capital Markets Authority with their Fintech lab, very much inviting, encouraging the Fintech startups to apply with their projects so that they can actually play with the sand, form together, and then launch accordingly.
Great. Now, we're running a little bit out of time, although we still have a few minutes before the coffee break is due. And I'm going to ask you all, what are the key points we're likely to make when we meet again in Toronto in 2 years' time? Because I'm struck by the contrast between this discussion and the discussion we had in Prague 2 years ago, which was, people were excited, they saw this as innovative, they were putting it up in opposition to everything that we did in our day-to-day worlds, and words like disruption, transformation were used. What I've been struck by in our conversation this morning is how much more mature our attitude is, and we're kind of facing forward and saying, actually, this is just a job now to build and to integrate, to do so in the right way and safely and so on and so forth. So how do you think you would summarize the panel on this topic in Toronto in 2027, Alexandre?
Well, I mentioned earlier, I think we out of our denial phase. In any change, you go through denial, then acceptance, and then implementation. We're definitely over the acceptance and now into implementation, which is good. I think we're not completely there yet in terms of acceptance of public chains versus private chains, which is a problem in my view, because public blockchains opens up this true decentralization potential that blockchain can bring and digital assets can bring. It will require another cycle of denial, acceptance, and implementation. But we'll get there, like the intranet, like public clouds and private clouds. We
got there with the internet in the end, you're
exactly.
right.
We'll get there.
Stanley?
Yeah, as just that, we are in the implementation stage. And I think, a lot of technical issues or legal issues may be resolved over time. But the issue is, maybe it's time for us to think about what would be the contingency plan, on all these platforms we're developing, is on new technology and a new set of rules and, new mode of operation. But then, what would be the contingency plan if something wrong, in any of the building blocks, of this platform.
Building resilience, more attention to that. Gunsel, what do you think we'll be focusing on in 2 years' time?
Thanks, Mark. I would like to base my predictions with some facts that's out of the city report that was mentioned yesterday. I also have city colleagues, Alexandre from Latin America and Philip from Asia. Actually, Philip was part of that report, apparently. First of all, from 2024 to 2025, the post-trade industry, 500 corporate institutional respondents said that 10% in 2024 were engaged, 20% in 25, so it's 100% increase. So that's the speed of the interest. From the use of, or the value of what we are talking about, again, more than 50% of this existing respondents said that the blockchain usage and the implementation of digital assets will decrease the post-trade processing costs by 50%, right? Or 50% of them said that processing costs will decrease. Let me amend what I said. Half of them believe that the processing costs will decrease, either from technology failures point of view, operational failures point of view, liquidity management point of view. And the liquidity asset mobility, almost half of the respondents believe that this will enhance the liquidity asset mobility. So in a world like this, when we're talking about almost continuous settlement, programmable money versus asset on-chain settlement, and when the collateral, the liquidity is increased, collateral is movable, that is also mobile. When the institutional players, banks, CSDs, and us, we see that there is much more that can be done with less, and much more efficiency, effectiveness will bring in, the adoption will increase. And in 2 years' time, I think we'll be talking about the success stories, as well as some problems, how we can solve them, maybe with the new adoption cases of AI, which we didn't have the chance to talk today. But certainly, when things are programmable, you would need some programmable intelligence also applied on that.
Wonderful. And Binur, you started this great conversation this morning, and Gunsel, you're absolutely right. I tactically avoided talking about AI. I mean, you can have a whole conference about AI, so leave that to one side. But Binur, what's your prediction, 2 years' time?
Yeah, absolutely. That's going to be all about AI. That's going to be about convergence of money programmability, programmable assets, programmable money, and AI agents, for sure. So what we see in the payment space, right? The payment AI agents are coming, etc. And there's an idea of that internet theory, when most of the content in the internet will be generated by LLMs, by AI, etc. I think we will see some similar concept first in retail payment space, when all of the payment operations for e-commerce will be done by AI agents connected to your chatbots or whatever interfaces we have. And in the end of the day, I think we will see similar pattern in post-trade infrastructure, because already, last year, the total circulation of stable coins was around 27.6 trillion, which is more than Visa and MasterCard combined. And 98% all of that circulation were done by bots, right? Because that's speculative trading bots. And that's going to be a huge problem for us as regulators, because we have to first recognize what is AI agent. We should be able to verify that this AI agent has proper rights from the end consumer, and how it all will coordinate, because everything will speed up. The programmability of assets, the programmability of money, and convergence with AI can make any financial crisis like 2 seconds. So we have to build a proper regulation, and I think starting from the next year, and especially in 2027, that's going to be a key topic.
Fantastic. So CSDs may not have a job, but Alexandre, you will. Thank you, panel. That has been a wonderful discussion.
Oh, thanks to the speakers and Mr. Mark Jem for moderation. Now we invite our speakers and moderator to save this moment in stories and to take a group photo. By tradition, participants are awarded memorable gifts from the organizing committee. One more photo. Thank you so much. I have the honor to invite to the stage CEO of International Capital Market Association, Mr. Brian Pascoe. You're welcome.